In this video, I'm going to demonstrate a mean reversion strategy which, depending on your profit preference, can have a win rate between 82 and 92%. The profit choices are simply the amount of pips we choose as our profit target. I'm going to show you all the results for all the different profit levels, but as expected, the smaller the profit target, the higher the winning percentage. I often develop mean reversion strategies for the Forex markets because they tend to work quite well. However, I do have quite a loose definition of what I call mean reversion. Typically, I might call a strategy a mean reversion strategy when buying into weakness and selling into strength, using a whole host of different techniques. But I might also call that strategy a reversal strategy too. But the strategy which I'm going to show you here today actually uses a moving average for the exit, which, after all, is the mean. I've had this idea for this video in my mind for a little while, but recently I've been getting quite a few emails asking if I could show you exactly how I program some of my strategies in MultiCharts. So I thought this would be a great strategy, not only to show you all the test results, but show you exactly how I got those test results and how I programmed the strategy in the first place using MultiCharts. MultiCharts is the testing and the trading software which I use, which allows not only strategy testing, but allows you to turn on some automated trading. Then, like me, you can have a bunch of strategies, you can have different strategies, trading different markets all at the same time. The computer running MultiCharts then looks for the trades, whatever time of the day, and then it can place the orders automatically to your broker for you. It really is an invaluable piece of software. There are other trading softwares that do the similar thing as well. Tradestation is very similar to MultiCharts, and the code which I'm going to be writing today will be extremely similar if applied to Tradestation too. But before we actually program a strategy, we need a strategy which has a fixed set of entry and exit rules. There's no room for judgment or discretion. That in itself has a lot of benefits in terms of trading strategies. Anyway, let's first go and have a look at the rules for this mean reversion strategy. We'll see some examples on the chart, and then we'll apply a stop loss and a profit target, looking at the best levels, and then we'll see overall what the test results look like. And then finally, towards the end of the video, I'll show you the exact code which I've used to do all this testing, and I'll walk you through the code step by step so you can see exactly how I went about programming it. Okay, so trade entries. We're looking at the daily chart of Euro-Pound Forex pair. So rule number one, this is for long trades. We want to see that the close is less than 20% of the range and the close is under the 50 period simple moving average. If those conditions are met, then we're buying on the close of the bar. We have the opposite rules for short trades, so we want to see the close is greater than the upper 20% of the range and the close is above the 50 period moving average, and then we sell short on the close. So what do I mean by 20% of the range? Well, I'll show you exactly what I mean when we look at the trade example on the chart in just a moment. Let's look at the trade exits. Number one is the stop and reverse. That means we're in a long trade until we get a trade signal to go short. And then when we get that signal to go short, we'll exit the long trade and we'll reverse the position and we'll go short. So that's what stop and reverse is. Exit number two, if we're in a long trade and the close crosses above the 50 period moving average, then we sell on the close of the bar. And the opposite for the short trade. If we're in a short trade and the close crosses below the 50 period simple moving average, then we cover on the close. Number four, we're going to have a stop loss, which we're going to test the different values. And number five, we're going to have a simple profit target in terms of number of pips, and we're going to test those targets too. So looking at as an example on the chart, let's look at this first short example here. The cyan line is the 50 period moving average, and remember we can only go short if we're already above the 50 period moving average, and we can only go long if we're below the moving average. So we're above the moving average, that's one of our conditions met. And looking at the second condition, we want to see that the close is within the upper 20% of the range of the bar. So the range of the bar is from the high to the low of the bar. I'm using a candlestick here and you can see that that's the extremes of the wicks, so the high to the low. When we work out that range, we want to see that the close is within or higher than the upper 20% of that range. It's a simple calculation which I'll show you how we do later on when I show you the code for this strategy. And the opposite for the long trade, we want to see that the close is in the lower 20% of that range. So what we're looking for is in terms of this long trade here, we're looking for it to be under the 50-period moving average, and then we want to see quite an extreme or quite a hard move to the downside or close to the downside. When we see that, we buy the trade, expecting it to then revert to the mean. So starting over here at the left, let's look at this first trade. We've gone long here. Now, on this example, I haven't got a stop loss or a profit. We'll see those later on. So we're only looking for two separate exits at the moment. So we've gone long, and the only way that we're going to exit is if we get a signal to go short or the close crosses above the 50-period moving average. And actually what happened here was we actually got both. We got the first close above the 50-period moving average, but the close was in that upper 20% of the range, so that was actually a signal to go short. So we've gone short, and then you'll see the next bar, we've got the close below the 50-period moving average, so that's our signal to exit that short trade. You'll notice that the close wasn't in the lower 20% of the range, so that wasn't a trade to go long. We did get a signal to go long 2 bars later, where you can see that the close was in that lower 20% and we were below the 50-period moving average. So we went long, then we exited on a stop and reverse trade, got short, exited again on a stop and reverse trade, went long, again stop and reverse, stop and reverse. So in fact we've got these 1, 2, 3, 4, 5, 6 profitable trades there, most of them being the stop and reverse. So I hope that clearly explains the entries and the exits. All the testing which I'm going to do is going to be using one full lot of Euro-Pound Forex pair, and I'm going to use back data from January 2008 through to September 2023. As I mentioned, I'm using the software MultiCharts to do the testing, and I'm using the Forex data which I got from Oanda. So let's go and have a look at the first set of test results. Okay, here we are in MultiCharts, and we can see the daily chart of Euro-Pound. Firstly, we're going to look at the results, not using any profit target or stop loss. So looking at the performance report, you can see that it makes almost 80,000 in net profit. It's got an equity curve, which is really quite nice. It looks like the behaviour of the strategy has been quite consistent over the years, which is always a nice thing to see. There's the close to close equity. Looking at the trade analysis, got almost 300 trades, percent profitable is 86%, average trade value of £267, that's equivalent to 26.7 pips, so by the time we've taken out some costs, a few pips in costs, we're still got a very large average trade, so that's great. Largest losing trade is 6,700, that's 675 pips, but we'll be bringing that down when we introduce the stop loss. So I had run an optimization on the stop loss value, and I've used an amount of pips. You can see here we've got an input which is my stop, and I've gone from 0, which is no stop loss at all, and you can see that the net profit is that 79,000, which we've just seen in the performance report, and I've gone from 0 through to 500 pips, and I've gone in increments of 20 pips. So we look at the 2D graph, we can see that this is the no stop, almost 80,000. We can see that the best value here is probably around about 300 pips, and it's quite central. You know, anything from sort of 125 through to the 500 pips is all quite equal, isn't it? With a bit of a spike in the middle around the 300 pip mark. Going back to the spreadsheet, we can see that highest value of 82,000 is actually at the 300 pips. So there's a wide choice of stop loss values which we can use. Let's just select the 300 pip stop loss. And I doubt it's made much of a difference to the performance report, the average trade value. We can see that now the largest losing trade is that 300 pips. So that's good, that's less than half that it was before the stop loss. Percent profitable, 82%, and I don't expect the equity curve to have changed dramatically, and no, it hasn't, so that's pretty good. In the next workspace, what we're going to look at is the profit target. So let's look at the optimization. and I've run an optimization on this input called my profit from 0, and you can see that we've got that 82,000. This is using 300 pip stop loss, gone from 0 right the way through to 1,000 pips, and I've gone in increments of 25 pips. Again, let's look at the 2D graph, and you can see here's the no profit. So the highest profit here is, what's that, about 150 pips, but you can see definitely there is stability in taking whatever profit target you want in terms of net profit. Let me just show you how the different profit targets impact on the percent profitable. Okay, so now we're looking at the percentage profitable. In fact, the scaling is not very good on this, is it? Because we're only going from about 80% to just over 90%. I think it's about 82 to about 94. And we can see that 0 here is down at about 82%. We already know that. And then we've got some very small profit targets, probably 25 pips, has the highest win rate. And then we come down to more realistic levels down here, and we can see again it's very, very stable whichever profit target we choose. I expect, looking from these results, that anything from about 350 pips upwards, then the profit target is actually irrelevant. I expect, we could have a 500 pip profit target, but I expect we're already going to be getting an exit in terms of the moving average exit or a stop and reverse exit. So the profit target is probably not actually used. So looking back at the spreadsheet, just at the earlier or the smaller values, we can see that the best in terms of net profit is 125. We can see the best in terms of percent profitable, like we just saw on the 2D graph, was 25 pips. The average trade has come down a lot, only at £75, so that's not great. For me, generally, I don't often use profit targets, but if you did want to change the strategy somewhat, then you could use something around about the 125 pip mark. That does produce the most net profit. So for this test, I'm just going to select the 125 pips. We've got a 300 pip stop loss. And on the chart, you can see none of these trades here have actually hit our profit target. Let's just go back, see if we can see any trades which might have hit the profit target. There is a trade here that's hit the profit target, but even at 125 pips, here you go, here's a trade that's hit the profit target. There's one here. Yeah, even at 125 pips, we'll often get out using a different exit before the profit target is hit. So looking at the performance report, that's what the equity curve looks like. Still nice. We already know that we're making £83,000, and we already know these statistics. More trades because we're getting out trades a bit earlier, giving us more opportunity to enter new trades. Percent profitable, 84%. We've still got that largest losing trade at our stop loss of £3,000. For a straightforward mean reversion strategy, I think the results are pretty good, aren't they? Next, I'm going to show you exactly how I wrote the code to do the tests which you've just seen. However, you will notice that I've used entry orders on the close of the bar, and I'm using the daily chart. In reality, if and when I take this strategy live, I'll reprogram the strategy to enter the market 10 minutes before the market closes. And to do this, I'd have to use an intraday chart. I'd probably program it and use it on a 5 or a 10-minute chart. A lot of my preliminary testing, like you're seeing here, is done on daily charts, and that's just for speed. You could use the same strategy on the daily charts to trade live, but what you'd probably do is you wouldn't get filled on the close. You might get filled on the open of the new bar. And the problem with that is most Forex brokers tend to drastically widen the spreads around the open of the new bar, and those wide spreads mean less profit. So that's why I tend to program strategies to enter 10 minutes before the close, or sometimes 90 minutes after the new open. You could do either. At both of those times, just before or 90 minutes after, the spreads are a much more normal level. With a strategy like this, the difference in the backtest results between entering on the close, like you see in the tests today, or entering 10 minutes before, or even 90 minutes after the open, the results aren't going to be dramatically different. So you don't need to worry about that. You just need to consider, actually, when you're live trading, don't enter on the open of that new session. We're going to have a look at that code in just a second. But firstly, I want to give you the opportunity to get 6 more trading strategies which have tested out pretty well, and they also include the code. I've put them together in my popular trading course, but it's not just the strategies which are included in the trading course. I've also included modules to get the most out of those strategies or the most out of your strategies, such as the position sizing modules and the strategy monitoring modules. If you'd like to find out more about how that course can help you, I'll leave the links for that in the description down below. If you'd like some more rule-based strategies for free, then at the moment you can get my 22-page Beat the Markets strategy guidebook. If you find the link for that down in the description, then you can get immediate access for free. I'll give you 3 more strategies, all the rules for them, and I'll show you a lot of the testing results. So if that interests you, links also down in the description. Now, let's go and have a look at this code. We can access the code in various ways. I'm just going to format signals and go script, and that's going to open the Power Language editor. Now, just before we look through each line of the code, I just want to say that I'm not an expert programmer and I don't have a programming background or education in programming. I've just learned to use Power Language or Easy Language as I've created more and more trading strategies over the years. So there could be quicker and better ways to create this strategy. And those of you who are expert programmers could probably set me straight. But I have got pretty good in writing these codes to do what I want in both terms of the backtesting and for automated trading in a live environment. So let's look at the first line of the code. Anything which starts with a double forward slash actually gets highlighted in green just automatically. And these are just for notes. The computer is not looking at whatever you're writing here, so you can write anything here and it won't affect the strategy. So 14th September, I'm creating this code for a video. Now, we've got 3 inputs. We've got my MA length, my profit, and my stop. And you see that we've got a moving average length of 50. Now, I didn't adjust this on the chart, but because I have created an input, that means that I can adjust it on the chart. And next to these, I've just got the notes, length of the simple moving average, profit target, and the stop loss. So the next little subheading is entries if the price closes in the upper or the lower 20% of the bar's range. So let's have a look at this first buy entry order or long entry order. If the close is less than, and then we've got this here is essentially the 50-period moving average. So average FC, and then we've got of the close, comma, the length, which is at the moment equal to 50. So it's saying if the close is less than the 50-period moving average, and then this is our calculation to make sure that the close is less than the lower 20% of that bar's range, then buy this bar on the close. It's that simple. And then we've got the opposite for the short trades. If the close is above that 50-period moving average and the close is greater than the upper 20% of the range, then sell short this bar on close. So we could actually run this strategy with just these entry orders, and that would give us our stop and reverse strategy, because we would be exiting when we got an entry to go in the opposite direction. But we do want some exits, and that's what the next line is. Exits with a close less than or greater than the simple moving average. And the average is the same. We're using that same input, which, remember, the length of 50. So if the close crosses above the 50-period moving average, then sell this bar on close. Now, MultiCharts recognizes that a sell order is only an order when we're already long. So we don't even have to tell it that we're already long, okay? And the opposite, if the close crosses below the 50-period moving average, then buy to cover this bar on close. So that's exit our short position. And then lastly, we've just got our stop loss and our profit target. So the way this is coded is saying if the input of my stop loss, which we've seen is adjustable, if it's greater than 0, then we want to use the stop loss. And the set stop loss is the MultiCharts reserve word, and then the value is going to be of my stop. So for an example, if we set the input of the stop loss here to 100, then if my stop loss is greater than 0, well, it's going to be 100, so it is going to be greater than 0, then set stop loss at 100. And very, very similar with my profit. If my profit is greater than 0, then set profit target. And again, set profit target is the MultiCharts reserved word for setting a profit target. And it will set the profit target at whatever the input value we've put up here. And that's it for the basic code for this strategy. If we just go back onto the chart, you can see that here's our inputs, and you can see that we have been adjusting. The last thing we were looking at was a profit target of 125 pips and a stop loss of 300 pips. We've kept this moving average length of 50 all the way through, but we can adjust that on the chart. We don't have to go back into the code and adjust it here. This can stay as it is. Once we've created this, we don't have to adjust it at all. We just go back and adjust the values on the chart. So I hope that's given you an insight into how I create and test some of my trading strategies. And I hope the coding side of things didn't look too complicated. When I'm creating and coding, I just work through things step by step, because you can test things step by step as you go along. For example, you could create a long entry order, and then you could add 100 pip stop loss and 100 pip take profit. You could apply that to the chart and just make sure that your long entries are occurring just as you want them to. If they're working well, then you can move on, and then you can create your short entry orders, and then you can start creating different exit orders, because you don't have to create the code all in one go and then hope that it all works when you apply it to the chart. You can apply it to the chart and see it operating step by step as you go along. That's the nice thing about MultiCharts and Tradestation alike, using power language and easy language. Well, I hope you've enjoyed this video. You've now seen a pretty decent mean reversion strategy for Euro Pound, and you've seen how I go about creating and testing and coding some of these strategies. If you've enjoyed seeing the coding side of things and you found it helpful, then please let me know. Just comment more coding in the comments down below, and that will give me an idea on how popular this video is. If I get a good few comments, then I'll continue creating more programming videos in the future. Anyway, that's all for this video. If you have liked it, then please give it a thumbs up and subscribe to the channel for more videos like this. Hopefully I'll see you next time, but until then, this is Jared Goodwin, and thank you.